We're speaking with Daniel Straus, President and Co-Chief Executive Officer of the Multicare Companies based in Hackensack, New Jersey. Thank you for being with us again on the Dow Jones Investor Network.
Thank you.
Today you announced the acquisition of the ADS Group, a privately held long-term care company headquartered in Newton, Massachusetts. Perhaps if we can begin by discussing what ADS brings to Multicare.
Well, ADS is an acquisition that's very consistent with the acquisition criteria that we have laid out for ourselves. We have a deliberate strategy of going outside of our existing markets to acquire new clusters, and in particular where we can dominate the marketplace. ADS is the premier provider of long-term care services in the Commonwealth of Massachusetts. It's the largest provider of long-term care services, and therefore it's totally consistent in terms of moving in a contiguous way up the eastern seaboard. ADS brings, again, the additional marketplace as well as two new business lines that are very, very important to us. One is ADS has a particular expertise in terms of it has a management company that, in addition to managing freestanding SNFs, has successfully entered the marketplace in terms of managing hospital-based skilled units that we feel is a growing area in terms of some of our other markets, and we hope to incorporate and bring some of that expertise. And then the second thing is they have a management and development arm for assisted living, which is a pretty big area. They've already developed 5 assisted living projects that are currently under management, and we're hoping that they're going to bolster our own expertise in that area. And then the other thing that is particularly exciting about ADS is their top-notch management. This is a company that is going to do really, really well for us because of the management. Alan Solomon, the founder of the company, is joining us as vice chairman, and Susan Bayless, who is the president of ADS now, is joining us as senior vice president as well as president of the new ADS Multicare subsidiary. And both of them are pillars of the long-term care community, and so we're very excited to have them with us.
You touched on a lot of things. If we can begin with how you like to move into new markets by clustering, as you have said. Will that mean that entering new markets from now on will be simply by buying the largest provider in that given market?
Well, we can't always get the immediate market presence and dominance. ADS is a unique situation. That's what's particularly exciting about the acquisition, that it just fit everything perfectly. Many times we'll have to build market penetration, but this is definitely a strategy we've employed, which is going outside of existing markets for new clusters.
And you also mentioned how 2 new business lines will be brought to Multicare Companies, specifically the management side of it as well as the assisted living. Can you talk about what sort of growth you're anticipating once the merger or the acquisition is complete by the end of the year?
Well, both. There are different answers. In the case of the management of hospital-based units, that's just an area that is beginning to emerge in other parts of the country where we operate. And what this will enable us to do is to bid successfully with the credibility of having the expertise in-house. We feel that there are a lot of hospitals that are going to benefit from this expertise, and we're going to be able to, we feel, pitch successfully this business. The second thing is on the assisted living side. We have a very strong development program. We have 5 projects that are currently in construction right now, and we have several others that we're working on. And ADS, having already completed these projects up in Massachusetts, as well as the ones that they have in development right now, are really going to put us on the map in terms of the assisted living industry. But what's really interesting is not the individual pieces, but the integration of the total story. You see, what ADS has successfully done, and it's particularly outstanding for a privately held company, and that they're a little bit ahead of the curve is by dominating the marketplaces that they're in. There are certain markets where they've created networks where they've employed many different services. So in a particular market, they'll have a hospital-based subacute unit, a nursing home, a subacute unit in the nursing home, assisted living facilities, and wrap it all with geriatric case management. That, we feel, is the future, because it's going to enable, those types of networks are going to enable our company to go and bid for managed care business, which is becoming very, very important in our business.
And you're presumably talking about markets within Massachusetts alone for ADS.
With ADS, they've done it in Massachusetts. Our models are very similar, I mean, in terms of building campus settings with skilled nursing and assisted living alongside, possibly getting in through ADS to the hospital-based subacute units, and building these networks in terms of clusters and dominating the local markets and being able to offer various levels of care.
If we can talk about terms of the deal, the acquisition will cost you $100 million in cash, debt, and stock. Can you go through how this will be broken down?
The cash component is approximately $62 million. The assumption or repayment of debt is approximately $27 million. And the balance is in the form of the issuance of roughly 530,000 shares of stock.
And you're generating a lot of excess cash flow for the first time. So in terms of cash, will you have $62 million is really what you want to pay? You don't want to change those percentages in any way?
Well, we've carefully crafted the different components to fit our structure. And in terms of financing it, we have unused over $100 million on our revolver. We've got access to various forms of lease and other off-balance sheet financing. So we've got a certain amount of flexibility in terms of what we're going to do going forward. So we're satisfied with the way this was set up, and it was carefully done.
And how will this acquisition impact earnings, since it's closing at the end of 96, if you can give us an idea for 97 earnings?
Well, what we've so far, what we've been able to do is get the story out. We're now caucusing with senior management in terms of how this deal is going to actually be financed. And the statements we've made is that this deal is definitely an accretive deal. It will impact earnings positively in 1997, and the extent of that will depend upon how we actually roll out the financing. And we expect to be back to everybody in the next few days on that.
Just if we can talk about your earnings outlook. For the second quarter, analysts, first call, are looking for 24 cents, and for the year for $1. Are you comfortable with those earnings?
We're very comfortable with that.
ADS has a run rate of $80 million. Can you break down where they're seeing their revenue coming from?
Well, roughly 80% of it is from owned nursing facilities, and the balance is in terms of the management and development that we've discussed. That's basically the two pieces. There's a de novo pharmacy that was joint ventured with our company, started up in January. It broke even in April, and we expect it to contribute to earnings in the second half of 96 and into 97 as it continues to ramp up.
Do you have a percentage as to how much they'll contribute to earnings, the pharmacy end?
It's actually small right now, but we expect it to continue to build. It's got excellent potential, but we haven't really decided what it's going to do.
Multicare has the highest margins in its peer group, actually, with EBITDA of 17%, and ADS's margin are 12.3%. What exactly does this do to your margins going forward?
Well, initially, as whenever we take on an acquisition, we see some margin dilution, but that's consistent with our pipeline. And then as we move these acquisitions through and integrate the acquisition, we find that the margins of these acquisitions inevitably move up to our margins, and that's part of the growth story.
So you imagine that you can maintain 17% going forward to
Yes.
achieving your growth strategy?
Yes,
Okay.
we believe that.
Can you discuss the integration of some of the other acquisitions that you've made this year, the Glenmark and the Concord?
Right. We've owned Glenmark for longer. Concord came on, I guess, at the end of the first quarter. In terms of Glenmark, it's been a very successful acquisition for us. It's working very well. It's slightly ahead of the expectations that we had set for the company. And what's particularly good about Glenmark is it's not just what is there now, but we're actually seeing some growth in terms of an additional facility or two to the West Virginia cluster, building up of the pharmacy base, adding new businesses, taking their portable x-ray business and moving it into New Jersey, which is in the works right now. So that's been very successful for us, and the management of Glenmark has really been fantastic for us. Concord is a little bit of a different story. It came on at the end of the first quarter. We have less real time in terms of how months under our belt, but it is performing in accordance with our expectations. It's just a different story because it's in that case we swept away management. We put in our own management. We're starting to see some significant benefits, and we expect it to pick up over the next few months.
Given that ADS is your largest acquisition to date, will that preclude you from making more acquisitions through 1996?
No, I wouldn't say that because we're going to continue to be out there opportunistically. But I will say that our acquisition pipeline now is really good and solid, and that will enable us to comfortably meet our numbers in terms of what the street's expecting for the next few quarters and even into 97 without any pressure in terms of doing additional acquisitions. Anything beyond that, of course, would, in our opinion, be additional growth.
As of noon today, your stock was down 1/8 to 20 1/4. Does this surprise you, this kind of market reaction?
I don't really focus on the movement of the market on a daily basis. I mean, I think that long term the markets are efficient, and I think that it's better for us to continue to make our numbers on a quarter-by-quarter basis, continue to show the growth, and let the markets take care of themselves. They always do.
Daniel Straus, President and Co-Chief Executive Officer of the Multi-Care Companies, thank you for being with us.
Thank you.
This is Shannon Turner for the Dow Jones Investor Network in New York.